Good morning and happy Friday to everyone. Let's talk about Bitcoin's chart. It marks a record of short positions, specifically a record in leveraged short positions. This means that all the traders exposed to leveraged Bitcoin have reached historic highs. In this video, we will discuss the latest news related to the futures market and also take a look at an interesting chart showing the availability of Bitcoin in this recent bear market compared to previous ones. But before we dive into the details, as always, I'd like to ask you to support the channel by simply leaving a like and subscribing. Have you done that? Perfect. Let's not waste any more time and move on to the PC view. I would like to start immediately with the data that came out yesterday, which provides insights into the monetary policies being adopted, particularly by the Federal Reserve in the United States. We can see that initial unemployment claims have come in more positively than expected. Analysts forecasted 234,000 units, but we actually had 216,000 units, indicating fewer initial unemployment claims and consequently fewer people losing their jobs in August. Another positive data point concerns inflation, specifically crude oil inventories. We know how significantly this data can impact inflation, as fewer barrels sold from the US economy could lead to higher inflation. However, this time it didn't happen. We saw a decrease of 6.307 million barrels sold during August. The level of inventories can influence the prices of petroleum products, which in turn can impact inflation and other economic forces. This might be due to increased sales of barrels from the US due to production cuts by Russia and Saudi Arabia. So, oil from the eastern part of the world saw more sales. Now let's take a look at an interesting report from the International Monetary Fund, IMF. The report suggests that banning cryptocurrencies in a jurisdiction only leads to a migration to other jurisdictions. In other words, trying to ban crypto mining doesn't solve the problem. It just shifts companies and infrastructure to other countries and jurisdictions. States need to understand this. While the United States hasn't outright banned cryptocurrencies, they are putting regulatory hurdles in place through various regulatory bodies. Moving on to another interesting topic, it's important to note that while it may not be accurate to say that BlackRock is quietly buying Bitcoin, it is interesting to see how BlackRock holds significant stakes in 4 of the top 5 publicly traded Bitcoin mining companies. For example, they hold 6.14% of Right Capital, equivalent to $1.92 billion. They are also the second largest shareholder of Marathon Digital with a 6.44% stake or 1.83 million shares and hold 0.88% as the second shareholder of Cipher Mining. They also hold a 2.28% share in TeraWulf, equivalent to 410 million. This is interesting because some believe that BlackRock is secretly accumulating Bitcoin, but this may not be entirely accurate. Now let's move on to discuss changes in Google's advertising policies concerning cryptocurrencies. Google used to outright ban cryptocurrency-related advertising, but they have recently changed their policy to allow the promotion of blockchain-based video games that use NFTs. This shift may be due to the growing cryptocurrency sector, and Google wants to remain relevant in this space. It's also worth noting that a Mexican billionaire during a podcast interview revealed that he holds shares in MicroStrategy, LinkedIn, Bitcoin miners, oil companies, and gold miners. This constitutes a significant portion of his investment portfolio. Now let's take a look at an interesting chart related to Bitcoin's leverage fund trading on the CME. We can see that there has been a significant increase in short leverage funds positioned by traders in recent months. This represents the largest short leverage position in Bitcoin's history. Additionally, when we examine the behavior of the present balance on exchanges, we can see that it has been steadily increasing since Bitcoin's inception in 2010, even during bear markets in 2015 and 2018. However, starting around 2020, we've witnessed a significant decline in the balance on exchanges, indicating that the percentage of Bitcoin within exchanges is decreasing. This suggests that many entities, both small and large, may have fully realized the long-term potential of Bitcoin. This is my speculation regarding the scarcity of Bitcoin, and of course this could potentially affect it, either positively or negatively in terms of supply and demand, determining the price through a limited supply and strong demand in the upcoming bull market. Before continuing, let's take a look at how the markets are behaving for all those who want to use an exchange, and one of the most reliable options in this category is BITGET. Through BITGET, especially for traders, there is the possibility to spin the wheel and try to win a trading bonus. These trading bonuses can go up to 500 USDT. In reality, they are not just trading bonuses, but also withdrawable bonuses. To participate in this promotion, you need to sign up using the links I've provided in the description below. Additionally, there is a 20% discount on trading fees available until the end of October. So if you're looking to use an exchange without many restrictions, this could be a valid alternative. However, please only keep funds on exchanges that you actively use for trading. Now let's take a look at how the markets are performing this morning. In general, we have a market that is trending positively. We see an exchange that is up 5.1%, Asset 3 up 4.4%, and Bitcoin, which is actually making an appearance in the world of cryptocurrencies, up 1.9% in the past 24 hours. Bitcoin in particular is up 2%. Although it's not a significant gain, it has maintained its price around $26,300. There are no noteworthy price movements at the moment. Ethereum remains stable, gaining 0.55%. As for Bitcoin, it's currently priced at $1,647. So in general, the market is relatively stable, and there are no major standout performances. Even in the top 10 or top 20, most assets are not surpassing a 1% gain in terms of performance. Now let's shift our attention to what's happening in the world of Bitcoin. In reality, not much is happening with Bitcoin at the moment. We've observed that the price has been hovering between 25,700 and 25,350, which is essentially a demand zone. There aren't any significant bullish movements that could push the price higher. However, Bitcoin also doesn't seem eager to break below this zone. It's interesting to note that for now, Bitcoin doesn't show any signs of closing below this level. Moving on to something interesting, we can finally see on the hourly chart for BTC aggregated open interest that, starting from 9 p.m. yesterday, there has been an increase in open interest. It has risen from 7,592 to 7,950. In practical terms, this is an addition of 400 million in open interest over the past few hours. We will have to see how the markets continue to behave. I also wanted to mention that most of the liquidation kit map orders are concentrated between $25,434 and the psychological level of $25,000. There is some activity above that level, but it doesn't have the same volume of orders as the lower zone. With that, we've come to the end of this video. I provided the links to all the centralized exchanges I use in the description below. In this video, I've mentioned BITGET as an option for those looking for an exchange with fewer restrictions. However, I'd like to remind you to support the channel by simply liking and subscribing. For subscribers, we'll see you in the next video. Goodbye.